In today's vlog, I want to give you more of a mortgage tutorial. Okay, there's a couple of things I want to go over. Number one, what's a rate lock? Number two, the difference between a 15 mortgage and a 30-year mortgage. And then last but not least, I want to talk to you about the difference between an interest rate and an APR. 3 bullet points, 3 items that are very, very important that I think you should know, that I believe you should know what they are, what the difference are, what the pros, what the cons are before you purchase a property. $4.49. I just got off the freeway. Today, I also work out with my coach. I don't know what we're working on today. We didn't talk about that yesterday. Yesterday we did legs, killed legs. I'm really, really sore. So, we'll see what we work out today. Back home from the gym. Didn't feel like working out today. Had a shitty workout. I still feel sleepy. I hate that feeling. But I got it out of the way and make myself some breakfast. Number one. What's a rate lock? A lot of the times, especially first-time buyers, come into the office, get pre-qualified, qualify them, talk about their mortgage payment, quote them an interest rate based on that day, right? They leave, they go, they shop for a home, they come back. In some cases, the interest rate is different. Very common. That's because the market fluctuated. And when I say interest rate is different, that can be either for the better or for the worse. A rate lock can be, your rate can be locked at the time of you securing the property. After going out shopping, identified a property, made an offer, negotiated, the seller agrees, the property's in escrow. You can lock in your loan at that time. You have a couple of options. You could either lock it in for 15, 30, 45, or 60 days. Regardless of what happens on the market, you're gonna go with that rate, right? Should something drastic happen in the market where interest rates go up, doesn't matter, you're locked in. On the contrary, should something drastic happen in the marketplace where interest rates drop, again, your rate has been locked in, you're going with that rate. Not a big fan of gambling, right? Let's just say that here's the way I would handle that situation. I get pre-approved, go shopping for a property, make an offer, I secure the property. I would then call my loan officer, tell him, send him the purchase agreement, ask him what the going rate is. If I'm okay with it, I'm okay with it. I'd ask him, what have you seen in the marketplace? Depending upon what he says, I will either lock or float. Let's just say he says, well, look, there hasn't been a whole lot of activity, I'd lock. If he says, well, look, there's gonna be a Fed announcement within the next couple of days, I'd lock. I'm not a big fan of gambling. If I'm okay with the payment at that time, I'm gonna lock in the interest rate. The pro of locking in your interest rate is no matter what happens in the marketplace, your rate's secure. But the disadvantage is, should something drastic happen in the marketplace where rates go down significantly, again, you've locked in your rate. So we are on our way to Aaron's tryout. How do you feel, Adam?
Excited.
He's so excited, he doesn't even want to wear his shin guards.
No, it's because they don't look good on me.
They don't look good on him. Shin guards aren't supposed to look good on you.
They're supposed to protect
They
you.
are supposed to protect you, bro.
They're uncomfortable.
I understand they are uncomfortable. They are meant to, you know what's going to be more uncomfortable?
Why?
After they kick you and you're not wearing the shin guards.
And your legs break.
Yeah, that's uncomfortable. All right, so as we continue today's mortgage tutorial, item number 2. What's the difference between a 15-year mortgage and a 30-year mortgage? Look, a 30-year mortgage is the most popular, right? As of right now, that's the longest loan term. A 15-year term means that you're gonna finish paying off the property in 15 years. A 30-year mortgage, 30-year term means you're gonna finish paying off the property in 30 years. The advantage of having a 30-year mortgage is you're gonna be paying the lowest payment at whatever the going rate is for that particular note. 15-year mortgage, you're gonna get a slightly better interest rate. Your payment's still gonna be slightly higher. I'd say a tad higher, especially because if you really think about it, you're cutting the life of the loan in half. The pro of having a 30-year mortgage is that, again, it's the lowest payment. The con is it's gonna take you, or the disadvantage is it's gonna take you 30 years to pay off the property. Now, that doesn't necessarily mean you can't finish paying it off sooner. Look, if you commit to paying a certain amount of money additional at the end of the month, there's a likelihood of you paying it off sooner. There's a certain formula for that, and I can do the numbers for you. Simply send me a DM, drop me your contact info on the comment section down below, and we'll go over the details, and I'll provide you some numbers. The 15-year term, the pros, you'll finish paying the property off in 15 years. Con is, the disadvantage is, you're gonna have a higher payment. I personally wouldn't go with a 15-year mortgage on any of my properties. Number 1, I need the tax write-off. Number 2, I'm not in a hurry to paying off any of my mortgages. Okay, and item number 3 for today's vlog is, what's the difference between interest rate and the APR? A couple of things. Okay, your APR is always going to be higher than your actual interest rate. However, your payment is calculated based off of your interest rate, not your APR. I repeat, your mortgage payment will be calculated off of your interest rate, not the APR. Your APR stands for annual percentage rate. And how you come up with that number is very, very strange. I don't even know that formula. The system calculates that formula. But essentially, the APR is the total rate plus fees that you're going to be paying to get this loan, is what your APR is. Annual percentage rate. So look, I hope you liked today's vlog. If anything on today's vlog isn't clear, or perhaps you have a question, there's a particular situation that you would want that I have a conversation with you about, feel free to send me a message, a DM, drop a comment on the comment section down below, and I will personally get in touch with you. Thank you so much. Thank you for watching. If you enjoyed this vlog, please give it a thumbs up. Don't forget to tell somebody about it. And if you haven't already, please subscribe and hit that notification bell.
And if you want to see Aaron and I race around this whole field, you have to like, subscribe, and in the comment section below, say JT Rules. Thank you.